self-described Bitcoin hardcore fan made a bold decision during a divorce settlement in May 2026. Instead of keeping the marital home, he chose to surrender it to his ex-wife and retain his Bitcoin holdings. What followed was an ironic twist. His Bitcoin appreciation outpaced the value of the home, resulting in a reported $400,000 profit. The story was shared by a prominent divorce attorney and circulated via the Bitcoin Magazine Telegram channel. At the time of the settlement, giving up the house and keeping Bitcoin was likely seen as a concession. Real estate is traditionally considered the safer, more stable asset in divorce proceedings. The ex-wife received a tangible, income-generating property, while the husband retained a volatile digital asset that could have just as easily lost value. Bitcoin's price trajectory helps explain the math. BTC reached an all-time high of $126,080 on October 6, 2025, and even after a 39% correction, it traded at approximately $76,708 as of late May 2026. If the settlement occurred when Bitcoin was priced significantly lower, the appreciation alone could easily account for a $400,000 gap over surrendered home equity. U.S. courts. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Treat Bitcoin as marital property, dividing it like a brokerage account or real estate. Valuation is typically pegged to the date of separation, which creates a unique risk. Whichever spouse ends up with Bitcoin could face either significant gains or losses depending on market conditions. In this case, the Bitcoin holder was the winner. The attorney, whose first name begins with J, presented the case as a real-world example of how volatile asset allocation in divorce can produce unexpected winners and losers. The story highlights a growing trend. As Bitcoin becomes more integrated into personal and financial planning, it is increasingly being treated as a legitimate asset in legal and financial contexts. The irony of the case is that the husband gave up the home, traditionally seen as the more secure asset, but ended up with a larger financial gain due to Bitcoin's performance. The story has drawn attention for its real-world implications. It demonstrates how Bitcoin's volatility can create unpredictable financial outcomes in legal settlements, especially when compared to traditional assets like real estate. This case may also serve as a precedent for future divorce proceedings involving cryptocurrency. As Bitcoin continues to move in and out of bull and bear markets, its valuation on the date of separation could determine whether a spouse ends up with a winner or a loser asset. The reported profit of $400,000+ from Bitcoin holdings, retained after the divorce settlement, underscores the potential for large gains or losses when crypto is involved in legal matters. The next signal to watch is how courts handle Bitcoin valuation in future settlements, especially as the price of Bitcoin continues to fluctuate. If the trend of Bitcoin appreciation continues, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Individuals may choose to retain crypto assets during divorce proceedings, despite the volatility. If Bitcoin's price drops significantly in the future, the opposite could happen, with the real estate holder ending up with the better financial outcome. This case also raises questions about the legal and financial strategies people should consider when entering divorce proceedings involving cryptocurrency. The story is a real-world example of how Bitcoin's price movements can have real financial consequences in personal and legal contexts. As Bitcoin becomes more mainstream, its integration into legal and financial systems will likely continue to grow.